Thanks. So let me begin with a bit of a disclaimer. As you may have heard, if you joined a little bit early, this is an evolving situation. It's I heard someone compare it to a train wreck the other day. It's not all bad, but it is changing very rapidly. So as we go through these slides, there may be points where I tell you that I just don't know the detail behind a certain point or two. If you ask me a tough question, I will absolutely tell you the truth when I don't know it. That is, I'll tell you I don't know, and we'll just have to see because these regulations are rolling out fast. I've been following the CARES Act since it started in the Senate 3 or 4 or 5 weeks ago, and it has changed every day since then. It changed in the House. It changed when the president signed it. It changed when the SBA rolled it out, and now we're waiting for the banks to roll out the final version of it. So I'll let you know. Secondly, I want to just tell you that I am a small business guy. I feel your pain. I'm living your pain right now. I have a company of 10 employees today, and our world changed last week, 2 weeks ago, and I know your world has too. So we're coming from the same place. I've been a long time small business owner and small business consultant. And so I want to start with something very broad for all small business owners and review, where we're at, what we should be thinking about. The priorities for small business owners today are cash, and cash. 3 top priorities. If you've taken any finance classes or any other webinars about running your business, you know that cash is king. And boy, this is proof right now. When you need cash to pay payroll or rent or utilities or inventory, and you're running out of it, or your customers can't pay you, you'll understand why. So in today's webinar, besides the specifics around the legislation that we're going to discuss, I really want to take a slightly bigger view and talk about how you can get proactive as a small business owner. And that begins with evaluating your customers. So in any crisis like this, it's not just about us, it's about whether our customers can afford to continue paying us or continue hiring us, and how our customer mix is changing. So already in the HVAC industry, we're seeing corporate offices, large office buildings, spending less, and residential folks spending more on their homes. So there's a big shift going on. What does that mean to you guys? Does it mean that maybe you got stuck in the middle of a large project for a corporation that has shut the project down, or you finished a project last month for somebody who now can't pay their bills or won't pay their bills because they're going to hold on to the cash? So it might mean a lot of things. What's most important is to evaluate your cash flow and create a cash flow forecast. It does not have to be anything really wildly complicated, but I suggest 3 lines on a spreadsheet that cover 3 months out, and start with the balance of cash in your checking account today. How much cash is going to come in, meaning when you looked at those customers, how many of them do you think are actually going to be able to pay you in the future? And then how much cash has to go out? Payroll, rent, utilities, cost of goods sold. How much cash do you have to spend? Now, this is really different than the accrual point of view that most small businesses use. We're not talking about matching invoices with bills or cost of goods sold on a project. We're only talking about what cash you have to spend and what cash you believe you can get in. So a cash basis forecast. And then we start trying to save cash, right? If you can forecast it out, then you can also identify the sources and uses, and you can start trying to save it. And the first big place that I suggest you save is on what's called forbearance. So if you have a loan on a building, if even your own personal home, or you're paying rent, or you have a loan on a fleet of trucks, or maybe your own personal BMW, you can call up the bank and ask for loan forbearance. And I will tell you my personal story. I did this with my home loan, and Wells Fargo was actually quite gracious. They immediately offered me 3 months of loan forbearance, meaning they took April, May, and June payments, and they kicked them all the way to the end of my 30-year loan. So I have no mortgage payments for April, May, and June. And I'll tell you, that was a huge weight off my shoulders to know that no matter what happened with my business in April, May, and June, I was going to have a roof over my head and not have to worry about paying my mortgage. So I know that that's true of the big banks. I know that it's true of car loans. I happen to have a BMW that I called about. They offered me close to the same thing. Some of the mortgage places are not quite so flexible. They have different programs, but I encourage you all to try it, both on your in your personal life and in your business, to go for some loan forbearance. And finally, while you're looking at the uses of cash, man, take this opportunity to just cut the fat. If you look at subscriptions, whether it's magazine subscriptions or software subscriptions that you've got that maybe people aren't using anymore, if you've got extra inventory that you can unload at fire sale prices, if you've got whatever overhead that you can afford to cut, water delivery or cleaning crews or cookies in the break room, start looking at those things very critically and cutting the fat now, because if this crisis goes on much longer, every penny is going to count. And finally, the proactive cash activity we can take is simply asking for help. And so that's what most of this webinar is about, is how to ask for help and where to find it. So let's get into it then. There are 3 sources of help from the federal government. There were 3 pieces of legislation passed in the last 3 months. In February, Congress passed the COVID Preparation Act. They actually saw it coming, and they deemed it a disaster, meaning it's the same kind of disaster as a hurricane or a tornado or an earthquake. And just as in a hurricane or after a hurricane, you can apply for an SBA loan to help rebuild your home or your business after that disaster. And so by designating COVID as a disaster, they opened up the SBA coffers to businesses who can claim that they've had an economic injury of some kind from COVID, and businesses could begin borrowing. We're going to talk a little bit about that and exactly what that disaster loan program looks like today. I won't cover the Families First Act much. You probably already know that was not a real boon to small business, although it was a help to employees. It requires small businesses to pay 2 weeks of sick time and up to 12 weeks of FMLA. So I won't get into that, but if you have questions about it, I know enough to be dangerous, and I will try to answer them. The third one, and the one we're going to really focus on, is the CARES Act. The CARES Act was passed just 2 Fridays ago, and most people are calling that PPP. That stands for Payroll Protection Program. These are the same things. The CARES Act was the name of the legislation. PPP is the program inside of it that established the loans that we're going to talk about. And we'll just call it the PPP from now on, but the legislation was called the CARE Act. So let's go back. Sorry, I'll begin at the beginning here, right, with the disaster loans. Let's talk about disaster loans. The correct name of this program is the EIDL. And so you may see that in different places. The SBA calls it the Economic Injury Disaster Loan. That gives you a clue of why they think you're going to use the money or need the money, because you've been injured economically by the COVID crisis. Technically, you can get up to $2 million for an EIDL. In most cases, we believe the SBA will offer you 6 months of expenses. So expenses is a big word, but we think that it covers payroll, rent, utilities, fixed overhead of any kind, plus the payments that you might have to make on your mortgage or car loans or prior loans from banks to buy things like inventory, right? So if you have outstanding debt that you're making monthly payments on, we believe that disaster loan could help you make all of those payments, cover all of those expenses for up to 6 months. Now, that could be quite a lot of money, and you can use it for any of those purposes. It's open to every business, for-profit, not-for-profit, employee-owned businesses, even tribal businesses, and the application is really quite easy. Although I will say, unlike some of the things we're going to talk about today, this one will take some time. It's a 1 month underwriting process at least. You know, after Katrina came through 6 months later, people were still saying that they hadn't gotten the money that they needed from FEMA and SBA. I don't think that will be the case this time, but it certainly will be at least a 1 month underwriting process. So it's not going to save your bacon tomorrow. However, if you apply for the disaster loan, you can also ask for an emergency advance of up to $10,000. And that is supposed to be delivered to your bank account within 3 days. Now, that's a optimistic statement. Let's just put it that way. There is a lot of bottleneck right now in the bureaucracy, in the banking system, in the SBA. And so I'm going to tell you what the law says the term should be, but what it actually is up to you. And it's your guess. It's good as mine. It's good as mine. So emergency advance is supposed to be $10,000 in 3 days. That is a grant, actually. If you say that you've been economically injured and you take that money, there is no obligation to repay it. In fact, there's no obligation to take the loan that they end up offering you. It just says you attest that you've been economically injured, so here's $10,000 for your trouble. I think everyone should apply for that, and everyone should ask for that $10,000 emergency advance. There is one caveat. If you take this advance, you cannot also take the full forgiveness of the CARES Act PPP loan that we're going to talk about in a minute. So we'll come back to that and it'll be very clear, but just remember there's this $10,000 grant here and you can't get it again later under the other program. And finally, the disaster loan has another $25,000 available to you almost immediately with a big asterisk, and the asterisk is if you have a good relationship with a local banker. So this $10,000 comes from the SBA. This $25,000 bridge comes from a bank, your bank, hopefully. And what you're supposed to do is take your application number after you've applied for the loan. You call your bank, you say, I have a pending disaster loan. Here's my confirmation number. Could you write me an express bridge loan, please? And they're supposed to say yes. And if everything works out right, they give you that $25,000. And then later it rolls into the entire disaster loan, assuming you're approved for a disaster loan. The $25,000 would roll into the total amount. If you don't get the disaster loan, you're not approved, or you just refuse it, you decide you don't need it, that's fine. This $25,000 becomes a 7-year note. And I'm going to get to some more details in the next slide. But just remember there's the loan, and then there's these two advances against the loan that you can get. One is a grant and one is a loan from a local bank. So how do you apply? Go to sba.gov. There's the full URL there, but it's easy enough to get to if you just go to sba.gov and follow the big yellow banners saying free money. It is a online application, and it's possible that you will find a page that lists a bunch of downloadable PDFs for this loan. Do not use the PDFs, please. This is the newest page that you're looking at here, this disaster loan assistance page at covid19relief.sba.gov. It's an online application, and you'll find a checkbox, literally a single checkbox that says, yes, please send me the $10,000 in advance. So that's the $10,000 advance loan we just talked about. You'll have to check that checkbox within this app. It's short. It's about 20 questions, 3 web pages long. The getting the loan approved is actually quite easy. They may request collateral, meaning your house or your business assets, for loans over $25,000, but they cannot require business collateral. Now, exactly how you dance out of that conversation, I don't know. It might be a negotiation with the bank. It might be it might rely on your actual personal financial conditions. I'm not sure, but they're not allowed to require collateral for any loan. Your credit score will matter as they evaluate how much to offer you, but they are not going to ask for a personal guarantee on any loan less than $1,000. So that's quite unusual. I've never heard of an SBA loan that does that, but there you go, $100,000, $200,000 with no personal guarantee. Also, no payments for 12 months, and you can wait until December to apply for this. If you're approved, it's a 30-year loan at 3.75%. So that's nearly free money. A 30-year loan is like a mortgage. If you're just having trouble wrapping your head around that, think about your personal home mortgage. If you bought a $200,000 home, you get $200,000 to buy the house, you pay for it over 30 years, your payments might only be $1,500 a month or less, right? So if your business could use $200,000 to make payroll or pay rent or expand or buy inventory, and you can afford to pay $1,500 a month for another 30 years, that's a pretty good deal. Yeah, that's a pretty good deal. So I'm going to stop there. That's my last slide on the disaster loan, and I'm going to invite questions just about disaster loan for this at this point. We're going to get to the PPP details in a second. But Mary, was there any questions in the chat box?
Yes, actually there is. And Dan brought up something about forbearance, which this is the first time we've received this question. So thank you for raising this, Dan. And he was making a distinction between a difference between forbearance and deferment.
Yeah. Yeah, like I said, there's each bank is offering something different. So the car loan guy I spoke to said, well, we'll defer a couple of months, but when those are after the 2 month deferral period, you've got to pay all of that back plus interest immediately. Um, the forbearance was the word that Wells Fargo used to say they're just going to add it to the back of the loan. And then there are even programs where there's forgiveness. So I'll tell you a little later about an SBA program that's going to give you 6 months of forgiveness, which means they're paying the principal and the interest on any SBA loan starting now. So there are all kinds of programs each bank has to decide by themselves.
Great. So thank you for clarifying that. And Jonathan is asking, I applied for the loan last week. Is the 1 month underwriting how long it would take for me to be approved?
Yes, that's the guideline, Jonathan. It's of course, we saw there were guidelines that said things would happen in 3 days or immediately, and that's not happening. But the guideline says that the SBA will take up to 1 month to decide whether you qualify and to make an offer to you based on your credit score and the amount of how big your company is, really, how much expense you have. Um, we don't know whether that's a real valid estimate of time because nobody has received any money under the disaster loan yet that I know of. It's only been available, well, I guess it was available during February. Maybe you could start your application, but even the earliest applications would only just now be hitting that month. And the application process was still changing as of April 3rd, just last week. So my guess is we're starting the clock now to count down that month. We'll see.
Yeah, now this is interesting, and this is probably a really good transition. So before I raise that, I did want to point out that Jessica Blair from Train has posted links to our infographics, and this is an infographic that is much broader than the topics that we're covering here, but we do have a section about both the payroll protection program as well as the disaster loan program. So thanks for including those, Jessica. Um, Question from Randy about the loan is, can the 30-year loan be paid early without penalty?
Yes, Randy, thank you for bringing that up. Let me go back a slide here. I don't think I have that, but all of these loans that we're going to talk about today come with just amazing terms. It is illegal actually to charge the borrower anything on these loans. So you cannot be charged an origination fee. You cannot be charged a packaging fee. You must be allowed to pay it off early. Uh, it's completely to your benefit to take this money now, and even if you just hold on to it to see what happens. As far as I know, there is no early repayment penalty.
Great. Great. So I want to transition then to our next subject, which is really getting into the PPP. And there's a couple of comments that uh, I think will be helpful in the transition. So one of the comments, someone asks, now, if you do the EIDL loan, you can't do the PPP. And I know you're going to correct that because the answer is, oh, no, you definitely can do both.
You definitely can, yeah.
And
Go ahead.
um, well, and the follow-up on that is you made a statement about conflicting funds. I want to make sure I get this right here.
Right.
And so will you clarify for the group what that means when you talk about the PPP?
Yes. Oop. So both of those questions are exactly the same. If you can take a disaster loan and a PPP loan, you can do both of those things. However, you can't double dip, right? That's an understandable statement. You can't take two loans for the same purpose. And that's what I meant. Maybe I didn't choose the right words here, but that's what I meant when I said it cannot conflict with a PPP. So you cannot ask the SBA to loan you a disaster loan to make payroll during May and June if you've also got the PPP helping you make payroll during May and June. But there's a lot of expenses in your business, right? You have more than just payroll to keep the doors open. You've got to put gas in the trucks. You got to keep spare parts on hand. You've got to pay the truck loan, all those sort of things. So long as you find other ways, other legitimate business ways to spend that money, you may apply for both loans. You may take both loans. You may spend both loans. I even had the SBA tell me yesterday, of course you can spend the disaster loan on payroll, just not the same payroll period as the PPP. So during May and June, if you apply for both and if you receive both, during May and June, you're going to use the PPP to cover payroll, and we'll get to that. But that still leaves 4 more months of July, August, September, October, to use the disaster loan money to cover payroll and rent and utilities and all those things. So I've heard time and again from the highest levels of the SBA, yes, you can use both loan programs, as long as you don't use the money for the same purpose, claim the money for the same purpose. And you can bet that there's going to be a small audit process when this is over, that you're going to have to cough up some receipts and show how you used some of the money. And by the way, there is, behind the scenes, the SBA is telling the banks, when you get a disaster loan and when you get a PPP loan, they will know, everyone will know if you have both. So you can't just, you can't hide your way through that one. So that's it. That is a good transition. May I go on then, Mary?
Yes, with one exception. Would you recommend contractors open up a separate bank account to track relief expenses?
That's a great idea, actually. I usually don't like additional bank accounts because it's just that much more hassle to keep track of and one more thing to worry about. If you're really good at keeping expenses straight, if you keep clean books and you've got your filing together and you got maybe just a shoebox where you put all the receipts that are related to this, I think that'll be good enough. But I kind of like the idea of taking the loan, putting it in a specific account, and then using it for the qualified expenses. That keeps it extremely neat. And when the IRS or the SBA asks you for documentation, you only have to show them that one bank account. You don't have to open your purse and show them everything that's inside of there. So good. So let's talk about the PPP then. Payroll Protection Program, again, part of the CARES Act. Up to $10 million this time. So the disaster loan was only $2 million. This is up to $10 million per application, or per business, I should say. Steve Mnuchin went on TV last week, 2 weeks ago now, and he said, small businesses will receive this money the same day they apply. And of course, we know that's not true. The fastest I've heard is 3 days. In fact, do we have someone on the call? Maybe we had someone on the call last time that said that they had gotten the loan in 3 or 4 or 5 days. So it does happen. However, the SBA will tell you, be patient, give us up to 3 weeks. Depending on the lender that you pick, it may take up to 3 weeks. You'll see why in a second. So up to $10 million theoretically, but the amount of the loan that you'll be able to take is actually calculated at 2.5 months of payroll. I'll show you a breakdown on that in a minute. Of course, you can only do this once. There's no double dipping, can't apply. You can't have more than one loan. You do apply through your bank. This is really important. The disaster loan is SBA.gov. You apply online. The payroll protection loan, you apply at your local bank. And it sure helps if you apply at the bank where you have a commercial account now. We'll talk about some options later, but Most banks are asking that only customers apply at their banks. And in case you're really cash strapped, you'll be happy to know that there's no payments on this loan for 6 months. So take 2.5 months of payroll and don't even think about paying it back for 6 months. Of course, we're going to talk in a minute about the forgiveness of this, right? It is a loan. You got to remember, this is a loan you're signing loan documents for. But there's 4 phases to it. There's the application, there's getting the loan, there's spending the money under qualified purposes, and then there's applying for and receiving forgiveness of the loan. That's what turns it into a grant and makes this really exciting. So let's talk about what the second phase there, what you can spend it on. 8 weeks of payroll is the primary purpose of the payroll protection program, thus its name. So right off the bat, you can see there's this big disconnect, right? You applied for and received 2.5 months of payroll, but now you're asked to spend that money in only 2 months. And so, gosh, what do? Give everybody a raise? Well, no, they're saying they expect you to spend the other 25% on utilities and rent, because employees still need an office to go to or telephones to make calls on. So keep the business open, keep the doors open, but don't spend any more than 25% of the total loan value on utilities and rent. And by the way, if you don't pay rent, you are allowed to capture mortgage interest on the building if you own the building that you're in instead of rent, or both if you have 2 buildings. But anyway, 8 weeks of payroll. This begins the moment you receive the money. You track it for 8 weeks. You have to be spending at least 75% on payroll. Now, let's talk about for a second what exactly 2 months of payroll means, 2.5 months of payroll, exactly what goes into that number. And that is only just 4 things. It's gross, let me start. All of these things are from the employer perspective only. Don't make this any harder than it has to be. Don't worry about employee withholdings or how much somebody's contributing to their IRA or whether they're on their family plan insurance or a single insurance. None of that matters, okay? The only thing that matters is from the employer's perspective. What did I spend on gross wage plus benefits, health insurance, and retirement plans, plus the city and state taxes, if there are any? And not all city and states apply employer taxes, but for most of us, this means SUTA, right? S-U-T-A, state unemployment taxes. And the SUTA tax is a percentage of payroll, but it's paid by the employer. So those 4 things are the basic foundation of what a company pays to have an employee, and that's what you count when you're trying to calculate 2.5 months of payroll expense. So just those 4 things, nothing else. We've been asked about union dues, we've been asked about workers' compensation insurance, we've been asked about payroll fees from the payroll processor. None of those things are included in the letter of the law, just these 4 things. All right, so that was the middle stage where you've determined your loan amount, you've spent it on qualified expenses. Now you get to apply for forgiveness. This is where it gets really interesting and fun, right? And what they've said is you can assume that as long as you follow the rules, you will have 100% forgiveness, except, let me go to that slide. So you'll have 100% forgiveness minus places where you haven't followed the rules exactly, and that would be, number 1, if you got the $10,000 disaster grant at the very beginning. Remember, under the disaster loan, we said you could get a $10,000 advance. If you took that, you'll have to pay it back now, because we're not going to give you both the free money under the disaster loan and the free money under the forgiveness of PPP. So your forgiveness will be reduced by the amount of disaster grant you received. It'll also be reduced equivalent to the reduction in headcount that you have compared to last year. If you had 100 employees last year and you only have 60 employees during the spending period, during the forgiveness period, then your headcount was reduced by 40%. Well, guess what? The forgiveness will also be reduced by 40%. Said another way, you will have to repay 40% of the total loan. One way or another, you've got to repay that loan. And it makes sense, right? This was a loan meant to cover your payroll for 100 people because that's how many you said you had. If you now only have 60 people, well, you've got 40 people's worth of salary left over. Give it back. That's kind of the whole point. You use it to cover your payroll. If you've got extra left over, you pay it back. Uh, you'll also be dinged on forgiveness if you simply reduce wages by more than 25% across the board. So there's some wiggle room. You can try to save a buck or two by reducing wages of the people in your of staff and employees. But if you reduce by more than 25%, then dollar for dollar, you're going to have to pay that money back to the SBA. It will not be forgiven. And finally, a penalty for spending less than 75% on the payroll. So again, if you get $100,000, you need to spend at least $75,000 on payroll costs in those 4 buckets we talked about. If you don't, I believe it's not perfectly clear, but I believe it'll be dollar for dollar. You'll have to pay back on the PPP loan. So what happens to the sorry, let me add one thing here. This is sometimes confusing. This reduction in headcount is calculated on a full-time equivalent basis, FTE, full-time equivalent. And although we will wait to see what kind of guidance the SBA gives us on doing that calculation, it's a pretty well understood term. And in general, it means a 40-hour employee or multiple part-time people who work a total of 40 hours. So if you have 2 part-time employees who work 20 hours each, that's just 1 FTE. Just that simple. Count the number of hours your part-timers work, divide by 40, and that's the FTEs. And then you add, of course, your full-time employees on top of that. So when they do the head count, the average head count for 2019, they're going to use FTEs. And when they do the average head count for 2020 during the covered period, you'll get FTE calculation also. All right, so that's my last slide on this section of the PPP. We still have ahead of us to talk about the application process itself, but I want to be sure we're good on the actual details of the PPP. So Mary, do you have questions building up?
Yes, we do have a few questions. So a question from Lisa. Well, what if you own your building and you don't pay any rent? Is there any other deduction?
That's really interesting. You can substitute mortgage interest. So if you still have a mortgage on the business and you're still paying the mortgage to the bank, you can consider the interest on your mortgage payment to be your rent expense. However, it brings up a really interesting point. The better way to structure that is to have 2 companies, one who owns the building, one who occupies the building, and the HVAC company then should be paying rent to the company that owns the building. And I'm just going to leave it right there, but that's the traditional structure to do that, and it's for a lot of reasons, including liability of if the building burns down or if somebody at the office gets hurt, the ownership of the business and the building should be separate so that they're separate for liability purposes and you protect yourself. And if you are set up that way, I'm sure there are people listening who are, if you are set up that way, the rent you pay to yourself is a rent expense, is a qualified expense, and you can use the money to pay that rent. If you have combined them and you're just one business, you can use the money to spend on mortgage interest.
Okay. Well, and looks like Kristen's got a related question, which is we don't have a mortgage on the business office. We own it outright. It's not our homestead. We were going to structure a lease back starting 1/1/20, but is it too late now?
I don't think it's too late. I think if you paper over it well, if it appears to be really legal, I think that you could structure this so that the operating business is paying rent to somebody. That somebody is probably you as an individual who owns the building or as an LLC who owns the building. The slide I've got up there right now is really still the most important. You can't spend more than 25% of the total loan amount on rent and utilities. And if you're doing things the right way, you might not even have that much left over. It'll be pretty tight. If you use the money to make payroll, the amount left over is, what's that going to be? For most people, it'll be $5,000 or $10,000 to pay rent and utilities. So, yeah, I think you can do it. I think you can get away with it. I think it's probably perfectly legal, and if you paper over it, that's fine. Is it really a big deal? Probably not in the long run. At least for the PPP, your rent might not be that much. Now, for the disaster loan, maybe that's a whole nother ballgame. You got 6 months of rent that you could pay using the disaster loan. That might be worth doing it.
Great. Thank you. This is a question from Darren. A sole proprietor with employees. Can the owner be included in monthly
I'm so
income
glad.
on payroll? Yes, I'll
Yeah.
let you take it.
Yeah, so glad you asked that. Yes, there's two considerations for the owner. Number one, if you are taking a wage through regular payroll, then yes, you count as an employee. In fact, you count as a FTE employee. So make sure you count yourself there also. Two, if you're taking, there's two scenarios. If you're taking a $250,000 salary out of the business, you can only count the first $100,000. I think we went over that. So payroll protection is only good for employees up to $100,000 in wages. You cannot count people. You cannot count the amount over $100,000 for any employee, including the owner. However, let's say it's the opposite. Let's say you're taking a $40,000 wage and you're waiting until the end of the year when you make a profit to take a distribution of 60. So you end up at 100. In that case, you can count the full 100 for yourself. If you can look back to 2019 and say, my total compensation was $100,000, we believe, this is maybe a little gray area, but we believe that you can count all $100,000 towards the wage or the loan amount, the qualified loan amount.
Great. And we have a question from Courtney. And this was one we've received in the past too. We have a few people that have gone on unemployment recently.
Yeah.
What is my cutoff for having them back to full time? I
Yeah.
thought I read that we just have to have them back by the 8-week mark. Is that true?
It's actually better than that. It's actually June 30th. So if you miraculously receive your check tomorrow, you can spend it over the next 8 weeks, but you actually have until June 30th to bring those employees back. Now, at first that seemed very confusing, but I think it actually makes sense because most of the businesses are not going to receive this money until May 1st. So you've got the 8 weeks, 4 weeks of May and 4 weeks of June to spend the money. And then the end of your 8-week period is June 30th. But the letter of the law says you have until June 30th to replace them. However, don't forget what we're looking at here. You've got to spend 75% on payroll. And that means you better have 100% of your employees pretty quickly in order to make that mark, in order to spend 100% of the money they've given you on payroll. Either that or the remaining employees are going to get really big bonuses and you'll get, well, I guess you'd be okay like that. That seems like a bit of a loophole, but technically, as long as you have all the employees by June 30th, you're okay.
Now, David, someone has noted that they did apply for the PP program and they were denied. Do you have a sense for what situations would be triggering denials right now?
Wow. I'm shocked. Boy, I'd love to have a conversation with that person offline, but all I can imagine is either they were a self-employed person who applied too early, because if you are an independent contractor, a 1099 person, an Uber driver, or a moonlighting as an HVAC installer, you cannot apply until tomorrow is the theoretical earliest, and I'm guessing next week before the banks are ready to accept your application. Or you might have a felony background. You might have defaulted on a prior SBA loan. Um, Maybe you didn't submit your taxes correctly for payroll last year, and so you don't have the right proof of employment for 2019. If you don't have those 941s and W-3s that you need to prove that you've been, doing payroll for this time, I suppose they could ding you. But that's a new one on me. I haven't met anybody who's been denied yet. Of course, I haven't met anybody who's received the money yet either. So there you go.
So is it possible they were denied because the bank had met their cap? I think, we're seeing some questions in the chat about, are the banks going to run out of money?
Well, I expect the banks may run out of money. Let me put that off to the next set of slides because I've got something on that for you.
Okay, great. Let me just double check and see. Yeah, it does sound like there are some folks who are getting that response back that they've met their max
Ah,
on the
I-
loans.
wow.
And another is reporting that my accountant said he had a client denied because he didn't initial in ink. He used the computer to initial.
Oh my goodness.
So
That surprises me also. That's really sad.
it is sad. It is sad. We've got a question back to the count of employees. If adding an owner or sole proprietor annualized income, would you need it to add in the owner to the total of the employees?
Say that again or interpret that for me.
Yes, I think the question is if the owner is going to be counted, or we're going to add the income,
Right,
the payroll of the owner,
right.
then we need to add the head count of the owner
Yes.
as well,
Yeah,
which, yes,
sure.
that would be the case. Yeah.
Yep. You can person and as a wage, as a payroll recipient.
Right.
And the forgiveness relies on both those things. Even though we don't know exactly how they're going to ask you to show it or prove it or calculate it, we do know that you'll be asked for both to just for people it went to.
Right. Well, and since now I've got another question about the max, what I'll do is I'll ask you to move to the next
Okay.
section. And the question, though, is what does it mean that they've met their max? So if
Mm,
you'll make sure you cover that in the next section, that would be great.
I will. I'll try. I'm not a banker, so I don't know what's going on behind the scenes, but we will try. So that was the guts of the PPP. I'm sure you're wondering, how do I apply? And that's where a lot of these questions come from. And a lot of my answers, as you've already seen, are be patient. So the timing is still up in the air. All the banks are scrambling. Tomorrow is the first day that sole proprietors and 1099 subcontractors can apply. We do know that Treasury on Wednesday said that they had already spent $100 billion. As you mentioned, Mary, President Trump requested another 250 billion. The Senate is debating it today, so that'll be $600 billion total. The banks, though, are key, and we've seen some really strange things happen, like Wells Fargo. Maybe these folks that had the questions just a minute ago were banking at Wells Fargo. Wells Fargo accepted, I don't know, thousands and thousands of applications, and they hit their cap very quickly. They opened the app page on Saturday and they closed it on Monday, saying, "I'm sorry, we're out of money." Now that didn't mean that they'd actually written checks for all of it, but they had calculated that they had already received requests for $10 billion, which sounds like a lot, but Wells Fargo is the country's largest bank, and out of 360, to think that they got 10 billion was kind of small. So the reason they did is the long, sad story of how poorly they behaved last year and all of the lawsuits and the Treasury suit that went against them. They went back to the Treasury, and the Treasury said, okay, we're going to uncap you. So Wells Fargo actually reopened today. And again, exactly what that means, I don't know. Do you have to reapply? Maybe. If you were in the queue and Wells Fargo said they ran out of money, and maybe you'll get another letter today that says, oh, just kidding, we've got you back in the line. I'm not sure. Can't hurt to reapply if you care to. You can certainly try a non-bank option. Those are at the bottom there. QuickBooks has promised to start lending. Your credit unions, although they're not usually SBA lenders, are often taking up the mantle. And there's a list of all approved vendors at this SBA link down at the bottom. It's kind of a long link, but you can get there very quickly by going to the SBA website, sba.gov, and looking at the information for the PPP loans. It'll lead you right there to find a lender. And as a last resort, Google non-bank SBA 7A lenders. You may get lucky and find one down the street. You may find a private equity fund or a venture capital fund or a SBIC, or there's all kinds of flavors of people who deal with this money. So quite possible that you could find someone else to call if your bank has denied you, or they're out of money, or they're not ready yet. Like Fifth Third and Citizens both said that they would be ready by Monday, and here we are at Thursday, and they're still not even taking their first application yet. So keep looking, and I do have a slide. One more slide ahead, I'll give you some other resources. But finally, just with regard to the PPP, you will need at least the first three things that I've highlighted here. The application form is online at SBA. Make sure you use the April version of that. There was a March version. It only lasted for 2 days. The April version is better, easier, simpler, faster. It's a PDF. You'll need some proof of wages, and by that they mean the tax forms that you submit with your withholding or your employment taxes, and those are generally the 941 and the W-3. The 941 is the quarterly payroll tax form that anyone who has payroll has to file every quarter, and the W-3 is the annual summary of the individual's W-2s. So each of your employees gets a W-2. At the end of the year, you summarize that with a W-3. So the applications I've seen have asked for the 941s and the W-3s. It's possible they would ask for the 940 or 944. All these are just different flavors of the same thing. And finally, make sure you have payroll records from your payroll provider by month for 2019. They want to see every employee that's been paid by month in 2019. Some banks are asking for some or all of the rest of these things, your 2019 tax return or financial statements. Corporate organizational means your company's charter that you filed with the Secretary of State, your original organizational documents, your bylaws, anything that they can find that proves that your entity exists and that you own it. All owners do have to attest to their affiliation with other businesses. Now, I wrote on there they have to sign. Not all owners actually have to sign the application form, but it may be that owners have to sign the loan acceptance contract at the end. So start getting them together, get everybody on the same page. And if they have other businesses that they own, you do have to disclose that with the application form. So you just add a page on the back that says, my name is David, I own 50% of the main HVAC company, and I own 50% of the LLC that owns the building, and I own 40% of my wife's art gallery business. And whatever that is, you have to disclose that. So be ready for that. And then, as we've talked about before, collect your statements, collect your bills, and your evidence of how you spend the money, and always be ready for questions. Every loan that I've worked on so far has generated at least one phone call from the bank to ask some question about it. Okay, so that's the PPP. I have one last slide, and that is, but wait, there's more. So the CARES Act was 900 pages, and in that 900 pages, they did a lot more than give small businesses some loans. In fact, they decided they were going to pay the loans for all small businesses who already have SBA loans for the next 6 months. They're going to make the entire payment for you, principal and interest. This is not forbearance. This is not deferment. This is a complete cancellation of the next 6 months of your payments on all SBA 7A and 504 loans, old and new. If you open a new SBA loan to buy a building or to buy a business next month, you'll get 6 months free, 6 months of paid payments. There are lots of state and local programs. So I want to show you this URL here, covidcap.com. I have to show you because it's just so sad that they did it wrong. Covidcap.com is the easy way to get to this page. And your browser will complain because it's not a secure site. You can see that up here in the URL. It's not an HTTPS. Blow on past that objection from your browser. This is from the Duke University here in North Carolina, and it's a great resource. Read through this and then use this first link, which also says COVID cap and is also not COVID cap. When you click that, what you get is a quick acceptance page with the terms, and then that lets you into this database of grants and loan programs all around the world. There are 300 different grant programs around the world that are available for businesses of all kind. I didn't do an HVAC search, but if you have a business in journalism or in London or just in general, there is money out there from other people other than the SBA. And I want to show you my favorite one here. Where'd it go? The New York City Coronavirus Dance Relief Fund. So there you go. If you need some money to throw at dance in New York City this week, applications are open for the New York City Dance Relief Fund. I can't tell you exactly what you'll find there, but I think if you're in hard straits, it's worth spending a half an hour on that site to find out if there's something that applies to you because of your minority status, your geographic status, your industry status, maybe because you were a Rotarian in 1975. I don't know. Finally, a lot more in that bill. There's going to be a federal tax credit for you if you are a truly impacted business. If your business is down by 50% this year, you'll be able to claim some of the wages you pay as a tax credit next year on this year's taxes. So in March or April when you file, you'll be able to get a credit back. If you have employees who have student loan payments, you can now make the payments for them and they pay no tax on that income. So it's one way to get tax-free income to your employees, and they might appreciate that. There is no penalty for early withdrawal of retirement accounts. If your business is in really bad shape or your household is in really dire need of cash, you are now allowed to dip into your IRA, your SEP, your Simple, Roth, whatever it might be, and pull money out to make ends meet during the crisis. There's no word yet on whether repayment it will be required. Right now, the general law is you must repay those kinds of withdrawals within 3 years or face an additional penalty of some kind. I'm not a tax planner. I'm not a financial planner. Call your financial planner and ask about that. But for now, you should know that the money's there if you absolutely have to use it, and if you decide that you can afford to take it out of your retirement account. For businesses that are in really bad shape, here's one more. You can delay the Social Security tax payments from your payroll. That's the FICA portion of taxes that the employer pays. You can just stop those payments until next year when you have to pay them back. It's more like a loan. For income tax purposes, you may now refile old income tax, business income tax returns and get a rebate on prior years based on losses incurred in 2018, 19, or 20. So it used to be that you could only, what they call carry forward those losses on your income tax into future years, but they now are making it possible to carry backwards the losses. So let's say you had a really great year, 2014, we were coming out of the recession, and man, you made a killing. You made $1 million profit and you paid taxes on that. Maybe you paid $300,000 in taxes. You get to 18, 19, 20, and you're posting losses. You can now take those losses, apply it against 2013, and get a tax refund from 2013. So that's called a carryback. It's worth calling your CPA or tax planner if you know that you've been paying taxes in prior years. You can carry back your loss from this year. And finally, last bullet, I know you can't believe it, but if everything I've said has confused you, Mary and the folks at Hardy have kindly created this Survey Monkey that will make it really easy for you to sort through all that stuff and figure out where to go first. surveymonkey.com/r/LKSBNQW. And that'll be on the slides that we can send around by email, and again on the presentation on the recording, of course. So that's a real simple way, and that's going to wrap my presentation. Of course, I'm happy to take more questions now and later by phone or by email. Feel free to call me or Mary, and we'll do our best to answer. That's a cell phone number. You can text me or email anytime. What do you think, Mary? Do we have a whole lot more to answer?
Well, we actually don't have that many, so think of this as the last call for questions. If there's anything we didn't answer, I did want to share a question we had from Andrea. Would you recommend applying through several banks to be very conservative, or will that create a potential issue?
Well, I've gotten mixed messages on this. You certainly cannot accept more than one loan offer. I suppose it is legal to apply at more than one place, although it has been discouraged just because of the bottleneck that we're already in. So I'm not sure what good it will do you. First of all, you really should prioritize those banks where you have a strongest commercial relationship. Maybe where you have a personal banker relationship would be the first place I would go. And also prioritize those banks that are preferred SBA lenders. So not all banks have the same status at the SBA. A preferred lender does not have to ask the SBA for underwriting help. A non-preferred lender is going to take longer to approve your loan because they have to get approval from the SBA itself. So prioritize your relationships, prioritize the preferred SBA lenders, the bigger banks who might have more money. And then if you want to apply more than one place because you have multiples of those, I suppose that's okay, but I'm not sure it's going to get you anywhere, really. It might just slow you down, actually.
Great. Carmel has a question. If your year end is not December 31st, will that be an issue?
Good question. No, I don't think so. What the SBA is asking for payroll records from calendar year 2019. But whether or not that's your fiscal year doesn't really matter. At this point, they're just saying, look, the calendar year is convenient because you should be done with it by now, so you'll have accurate closed accounting records for that period of time. And B, it corresponds to when you file the 941 quarterlies, right? So you filed all four of those. The fourth quarter 941 should be done by now. And really, January, February, March is still kind of in limbo for a lot of payroll providers, so they're not even asking for any quarterly reports or anything from 2020. So short answer is no. That's you can have any fiscal year you want, but you're still going to be held to the 2019 standard.
Great. Any more questions? Okay, well, I don't see any, but I do have a few items. So first of all, we are not going to send out a survey. We know that you probably already got a lot of email, but if you do have any feedback, if this was a good use of your time, if you just put it in the chat and let us know. We like to know because we want to make sure we're providing something that's valuable to you. So if you could let us know, that would be much appreciated. I am going to send 2 emails after this call. The first one will be right away, and that's going to be an email to everybody who signed into the call. You're going to get the deck. And it also has the links, those will be active, and David's contact information. I can answer questions about the presentation itself, but if you ask me accounting questions, it's not gonna it's not gonna be good for you. So I want to make sure you get.
Well, you can forward those to me, Mary. I'll try. I'll try.
Absolutely true. I will. I'd be happy to forward them. I just don't want to be a roadblock in getting you the right information. The other thing I'm going to do, we did record this. I will have a playback. It does take about 4 to 8 hours for that playback link to be generated. Right now, many businesses are using WebEx, and so there's a bit of a delay. And so I will resend the link I will resend the deck and the link in the playback as soon as I have it. So if it's not by the end of the day, hopefully it'd be first thing in the morning. So I just wanted you to be on the lookout for 2 emails. They will be from me. And oh, now we've got a few more questions that have come in.
Okay.
Let's see if I can read these quickly. Um, well, first of all, Jane says this is the most valuable webinar I've seen so far during the pandemic. So, first of all, Jane, thank you.
Thank you, Jane.
We appreciate that and glad to hear that it's been of value to you. Casey is asking, is there any reason we cannot pay our employees during the 8-week time frame to increase the amount we get forgiven?
No reason you can't do that. You can pay them whatever you want, more or less or in between. But don't forget that you also have to keep the same head count. So you get, you get stretched in two directions. Is if you overpay them, will you have enough of your own money to pay the same number of people, or are you paying less, and then you're going to get dinged on having a lower head count. So just be careful that you take both sides of that equation.
Okay. And then Ralph has a question, and I hope I'm going to get this right, Ralph. And if I don't, feel free to retype it. The income for owners dividends apply. I think it's does income for owners dividends apply during the same time period from a year ago?
Yeah. So I think, Ralph, you are looking to elect to take one of the alternative comparison periods from last year. Most people are going to say January 1st to December 31st of 2019 is my 2019 comparison period, and I'm going to take some averages from then. You can also take, if you have a seasonal business, you can adjust that to be January through March or February through June. I'm not sure, but there's a beginning equivalent period. And yeah, I believe that owners' compensation as a whole can count towards either of the calculations, either the amount you qualify for or the amount of forgiveness you get. It's simply total compensation. So the way we read it, owners' distributions count if you want to count them. Yeah, up to $100,000, right? You still have that cap. No employee can qualify for more than $100,000 annual salary rate. Which, if you break that down, 2.5 months of $100,000 salary is about $20,000. So no one employee can qualify you for or be paid more than $20,000 from those proceeds.
Great. And Ralph has a follow-up question, which is how do commission sales rep income apply toward the totals when they are 100% commission? How do you do that?
It's just cash. I mean, whatever you pay these guys, if it's commission or tips or you give them gift cards, you count it all as wages paid. And I'm sure that if you're running the commissions through the payroll system, then you're going to see that on the 941s and the W-2s and the W-3s. So you've paid tax on that. It's qualifying income and it's qualifying expense. Just make sure that the tricky part of that is that if you're set up to do quarterly or biannual commissions, you might want to try to sneak the commission payments into the month of June when you're spending this money, right? So that the commissions count towards your forgiveness. Don't wait until July or August to do commissions that were earned in February, March, April, May, or June. Pay them in June so that you get it counted towards your forgiveness.
And I want to apologize to the folks that put questions in the Q&A. I didn't see them. I was
Uh-oh, is there a whole nother
rushing
list
through.
now?
Well, I'm not finding them. So
Okay.
what I would say is if you've got any remaining questions, please chat them to us now. Chat them to me now. Again, I'm just scrolling over to make sure. I want to give folks a last minute. What if you didn't have employees in 2019, but you do this year? This is from Michael.
Oh, Michael, I'm so sorry. You might be out of luck. Now, there are, as we explained in the last question, there are different periods you can look back to. You might explore the period that's offered to new businesses. I have a feeling it's just not going to fly. If you were a business incorporated in 2009, maybe you were there all year and you didn't have any employees, you could still apply as a sole proprietor. You could be reimbursed 2.5 months of your owner's benefit, your owner's compensation, total compensation to you as the owner for 2019, divided by 12 months times 2.5. So get out your personal income tax and figure out your personal benefit. You certainly qualify for that. Otherwise, unless you had employees maybe in January, February, March, you might be able to use that time period, but that was meant for brand new businesses who just incorporated. So I don't think that's going to fly either.
Okay.
And by the way, I don't know whether we've talked about it yet. 1099 employees do not count as employees. 1099s are subcon or contract employees get to file their own application. And further, employees that you get through a staffing agency also do not apply. They are not your employees, so you cannot file on behalf of them, or you cannot file for payroll for them. They have to go back to their staffing agency.
Well, and Tina actually had that exact question, and it was in reference to that 25%. Does it have to be for utilities, rent, and mortgage interest, or could we use that for 1099? So Tina, I think that captures your question.
Well, yeah, kind of. I mean, you can use it for whatever you want. You could use it to buy inventory if you want, but it will not be forgivable unless you use it for rent and utilities and mortgage interest. So take the money and go to Vegas. Vegas is closed, by the way. Take the money and build your business any way that you feel right, but you will end up with a loan and not a grant unless you spend it the way they ask you to.
There you go. So Philip is asking a question. He applied for the PP loan already, the program, and I'm waiting for the approval. Should I still apply for the EIDL as well, or wait until I get the PPP loan?
Well, that decision, I'm in exactly the same position with my business. We've been mulling over whether to apply for the disaster loan or not. But the two should not be related. The disaster loan is 6 months worth of expenses, and you got to look at that and say, oh, and it is a loan, right? It's a 30-year, 3.75% interest loan that somebody's supposed to repay. It's not going to just disappear. So you got to ask yourself, do you need the loan? Are you going to spend it on the right kinds of things? Can you afford to repay it? As a CFO, my business is fractional CFOs is what we call what we do. We do management accounting and consulting. The first rule of borrowing money for us is never borrow to fund losses. So if your business is just losing money and you think you're going to lose money for the next 6 months, a loan, even a big, giant, nice term loan like that, is not necessarily going to fix your problem. It may just make things worse. So yeah, it's a really good loan. There's very little personal guarantees. There's no personal guarantees under $200,000. So are you personally going to get saddled with this? Maybe not, but gosh, borrowing only makes sense if you are spending it on something that you can really justify in any situation, not just in a crisis, but in any situation. So think it over as a business decision. Those two things are disconnected, right? Don't worry about the PPP when you're considering the disaster loan. Just make that decision on its own.
Philip has a clarifying question. So with that same EIDL loan, the SBA will pay the first 6 months of that new loan, he's asking?
No, you get a on the disaster loan, you get a 12-month holiday from payments. Now, it's just a holiday. It's not they're not making the payments for you. Your payments do not begin for 12 months. Your interest actually does begin, but the payments do not begin for 12 months. On the PPP, if it's not turned into a grant, the loan repayments do not start for 6 months. They're not forgiven. They just don't start for 6 months. The debt relief program is what you're getting confused with. The debt relief program only applies to 7A and 504 loans that either exist or are new or starting soon. But neither the PPP nor the disaster loan falls into that category. So they're not going to make 6 months of payments for you on either of the two loan programs.
Great. And just a comment from Jeff. Jeff has noted that every bank is different on this. And we certainly appreciate how confusing it could be. And we definitely heard stories on earlier calls today where folks would submit applications, but there would be no confirmation that their application was even received. And furthermore, we've heard stories that not only was there no confirmation, the money showed up. So
Wow.
so David, maybe you want to share your perspective on, and I think you have around how we need to be patient, that there are some unknowns, that this will continue to evolve.
Yeah. That's all true. We don't know anything about the forgiveness aspect of these loans yet. That's still 8 weeks away before you can even think about asking for forgiveness. So expect those 8 weeks to be full of SBA, rules and regulations about how to calculate that exactly and what forms to apply and what receipts to collect. And meanwhile, expect the unexpected because this is new territory for every person who's involved in it, from the president on down. We've never done anything like this. The bankers are pulling their hair out. You can imagine. I've been getting texts from bankers at 10 o'clock at night, and you might be old enough to remember the term bankers hours. That used to mean 9 to 4, right? Now they're working 24 hours a day just to keep up with what's been thrown upon them, and they're making it up as they go along. So it doesn't surprise me that you will see all kinds of stuff, including money hitting your account without signing any documents. That's the best news I've heard in a long time, actually. That it happened for you. I'm glad.
Yes. So we certainly appreciate your situation. Information is coming out all the time, and we're obviously trying to keep you as up to date as we possibly can. Since there aren't any further questions, I do want to thank David for being here. One of the comments that I want to share, David, is that, where is it? Kevin, I feel, he said, Kevin says, I feel like David really knew his stuff, which was refreshing when so many folks seem to be confused by what's going on these days. So I think that's such a great compliment to you. We appreciate that you've kept this at a level that we can follow and understand in these uncertain times. So thank you for being with us. And on behalf of Train Technologies and David, we certainly want to thank everybody and wish you much luck and much safety as we get through these trying and uncertain times. So thank you,
Excellent.
David.
Yeah, thank you, Mary. Thank you, everyone, for coming, and happy to talk more about it at any time.
Great. And I will get that deck in the mail here momentarily.
All right.
Thanks, everybody.